last night? I mean,
No, other than I laid off a little bit right before I expected the announcement, which ultimately ended up coming an hour and 15 minutes later. So I still have my short euro, but it's small. But I just thought, to be on the safe side, because it reminded me of the euro on FOMC day. I kept saying, this thing, because I kept scalping the euro short on FOMC day in the morning. We kept taking about 12 pips here, 10 pips there, another 14 pips or something like that. And I said, I'm going to be short going to the FOMC. And ultimately, that was the best way to trade it. But I said, you know what? This thing doesn't want to go down. I don't know what's going on. I go, it just doesn't want to go down. I go, this market just doesn't want to go down. But we did pull back down. And but the thing was, last night, I was like, you know what? This thing acts like it wants to run. I go, on some good news. You're going to jump up to maybe even 1151, which I'll show you what it came up with the 1151. Right now, we're just on an upside drift. There's that 1151, and if you look at it, this is where they would have gone to. Now they're doing an upside drift, and Lorraine said, made a good point, which is some other people did, monthly flows. I think they're just, they're not moving high. It's just like a bit of an upside drift. But this is where I said, I thought, hey, this is where they're going to go to. I go, if it does that, then I'm going to jump out. Well, we didn't get the thing. I mean, we only got 3.3 trillion. It was a big, major disappointment. My concern is, like I said, this 1043 is now a bias pivot because you can see how the market reacted. But I think we're going to go back down here because, like I said, next week's NFP, I think there's a risk that it's going to be a good NFP. Not great, not very, very good, just a good. And I think that's going to pull this euro back down here because, like I said, the people that got here, anybody that wanted to buy the euro, they're saying, well, I'll buy it, but I'm not going to buy it up here, kind of like what you like to say. I'm not going to chase it. I'll buy it here. I'll buy it down here, but I won't chase it. Now, if we had gotten some decent amount of QE, like let's say they did 11 trillion or 12 trillion, we would have blown through up here, and then people say, I'll buy it on the dip to 1126. Like, we didn't get it. You see what I'm saying? So, other than some month-end flows and that you're seeing here, but no one has had a chance to buy this thing on the dip, and there's nothing that's happened to say, whoa, we got that QE, we rallied up to 1185. You're crazy. I'll buy it here at 11. We didn't get it. And the thing is, I expect that NFP to come in rather decent. Well, there's a risk there. Another thing is, remember, last Friday we had the most dollar longs put on since the beginning of June. I don't think those people got knocked out. I'm not saying people didn't jump out, but I think that, like I said, I think that the euro is, at least at this point, I believe, is on a short leash. They can do all the drifting they want, but we can easily just come right back in here. Like you said, you always see these movements here with the euro. You see them saying, look, we rally, man, this thing getting ready to take off. Falls right back down. Man, then they take off. I knew I should have bought it. Comes up here, takes out the high, drops right back down. Same here, takes out the highs. Now we're blowing and going. Turns right. You see what I'm saying? That's one of the reasons I like to trade the euros, because you've got good volatility and you've got very good liquidity. But we'll see what happens. Obviously, to me, it just looks like an upside drift in the sense that no one's fighting. People are like, yeah, it's month-end flows. I want to be sure, but I'll just go and wait till next week. So that's how I believe that the euro is playing out. But my concern here is with the dollar CAD. Crude continues to fall in the toilet. My secondary target for crude, when it was at $50, I told people it's going to 45.5. But I think it'll get to 44.5. But it'll stop before then. At 45.5, we'll get a balance, go to 44.5. And then my secondary target's at 42.5. My God, we've already gone well past that. And 41.92 was at 38%. So here's crude. We're 70 cents away from a $39 handle. And what the hell is dollar CAD doing? Not a doggone thing. So we're going.
We do have the Canadian GDP today, which I think is going to be a big influence. I think it's going to be. I think it's going to be a market mover today. I do.
Maybe this thing looks like crap right now. I mean,
It does.
the thought that we've already shed $1.50 almost, and we can't even challenge the highs, much less go to new highs. This thing looks like crap on a stick. I can tell you that right now. It doesn't look good at all. And dollar yen, that's just going to continue to drift lower. And first place is going to be 102 in my books. I mean, I can't believe that anyone wasn't saying, "My God, I can't wait to buy dollar yen." And last night we kept waiting and waiting and waiting, and then this guy told me, he goes, "Man, that must mean it's going to be a bazooka." And I go, "No, to me it means the opposite." I go, "If you got a bazooka, you pull it out immediately." I think Kuroda's trying to put lipstick on that pig. And I'll be doggone it, 3 minutes later, they make the announcement, and that announcement was crap. Absolute crap.
Yeah.
So there goes that. So, and gold, it needed a 2-hour close. But I said at the beginning of the week, above 48.70. So it's holding up relatively well, but we've got a very long legged doji here. You see that? So that, to me, that suggests a move back down to 1330. But I'll tell you what, I got to give it to gold. I thought we'd have come apart, and it did weaken, but until we get a close about 48.70, this market is still doing a whole bunch of nothing. That would turn as bullish to close above 48.70. So that's about it. We'll see what happens here on the upside drift on the euro. But I'll tell you what, watch out for next week's NFP, because I think it's going to be pretty decent, and I think that is probably going to keep the euro on a relatively tight leash, but we'll see how things work out. But I tell you what, this U.S. economy is doing a heck of a lot better than 99.9% of people thought it was. As bullish as I've been, I'm even surprised, and I've been right as rain on this whole thing. I've been calling for all-time highs since the spring, and I kept telling people from 18 months ago, I said, don't worry about the U.S., we'll be A-okay, and it's gone way even beyond what I expected.
I think I owe you a case of beer.
Oh, yeah, that was already from way back. I called for all-time highs in August, and we blew through those highs. I knew we'd, like I said, people say that's not true. That's not true. The SPOOs from a day-to-day, week-to-week, maybe a month basis don't reflect the U.S. economy. Let me tell you, folks, the SPOOs reflect the U.S. economy in the overall big scheme of things, and why the SPOOs are at all-time highs. Yeah, it has to do with the Fed, liquidity, blah, 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 blah. But at the end of the day, if we had a crappy economy like they do in Japan, in Europe, and every other place that's not named the U.S. of A., we wouldn't be up at these levels.
Well, that's true. I mean, we're in a yield-starved world, and if you're an asset manager, your money's got to be somewhere, because when interest rates are nearly zero everywhere, you got to park it. Like, okay, Now, unfortunately, what that creates is to use the catchphrase, it sets up a house of cards. And when the house of cards comes down, it's going to be ugly, Paul, because, okay, you got every central bank that's just putting more and more liquidity in the market. You've got interest rates that are zero everywhere. You've got nowhere else to put your money. So everybody's money goes into the U.S. equity markets. They aren't even going into the European markets. So you're going into the DAX. You're going into the FTSE. You're trying to put your money in the Nikkei. And that's not really making you money. But what's making you money is in the U.S. markets. So you put your money in the U.S. equity markets. Everybody continues to reallocate, put more money in the U.S. equity markets. So you've got the whole entire world long U.S. equities in a yield-starved world.
U.S. equities, but I will counter that by saying our economy is not crappy like everybody else.
No, I mean, and that's the reason why the money's gone, not into the DAX or the FTSE or the IBEX or the CAC 40 or the Nikkei. It's gone in the U.S. market.
But
now,
I don't believe it's a house of cards like people try and say, because you don't have a house of cards when you have unemployment at 5%.
But it doesn't. You know what matters more than anything to me, more than anything. And I don't really care how much you put fundamentals behind anything. When everybody is grossly overweight a position, that is the house of cards. It's not the You could have the U.S. economy posting a, we could be growing at 4.5% right now. If you still have everybody in one position and one-sided in one position, that's a problem. And so
I
when
don't
you
think
have,
everybody's on one side. I mean, like I said, the last time these screws ran up, which was about, let's say about 4 or 5 months ago, my brother bailed out of everything in equities. I think the people overall, they're starting to build positions now. They're starting to build positions now, but we have the economy to back up, which a lot of people make up the debt. I go, how can you argue about the debt? The Fed's been making so much money hand over fist. We made money on the Fannie Mae, the Freddie Mac, the whole banking thing. They made money all on that. But I'm saying you're right. We're benefiting because the rest of the globe is so crappy that people are starved for our yield. So even if they try and raise rates, they can't even stay high. They can't take off like crazy because people are starved for the yield. So they're going to jump into the U.S. bond market. But there are a lot of people that bailed and they just won't come back. And that was the whole thinking. What people were saying, people like Zero Hedge and all these other losers. Zero Hedge is the biggest loser on Twitter there ever was. The guy's been wrong since 2008. So, but anyway. But a lot of people were saying that's the reason we were going to go to 1800 and sub 1800 because people had given up hope. And look, everybody that gave up hope, look where we're at right now. A lot of people have not participated in this. My brother bailed out of everything in equities about 4 or 5 months ago. The last run up, I told him, I go, hey, now, this is probably we're going to probably run out of gas for a while. He bailed out of everything. He hasn't been in equities since whenever, since for quite a while.
the Moses crossed the desert.
Yes.
Look, I can do that too. I can do that too.
No, I just think that, like I said, the difference is, I'll give you an example, a different analogy, is when you say, I don't care what fundamentals. Well, at the end of the day, it counts what you got. Lately, Mark Cuban has been calling out Donald Trump, saying Donald Trump isn't really a billionaire. Because if you're a billionaire, you have to have $1 billion in the bank. Well, we know Mark Cuban, he is the real deal. So when you say, yeah, but it doesn't matter. Yeah, it does, because if you look at Mark Cuban's bank account, there's a real $1 billion and plus in that account. When you look at Donald Trump, there really isn't. It's all a lot of fake, a lot of false bunch of stuff. That's why he doesn't want to show his real records. Forget the tax records. But my point is, at the end of the day, you go, yeah, but it doesn't matter. Yeah, it does, because if you turn around and you're looking at that person's bank account, that's the real deal. You can put all the puffy stuff out there and talk a whole bunch of stuff, but if you don't got the goods to back it up, then that's true. Someone could call your bluff. That's why, and I'm not going on, it's not a thing about Donald Trump, I'm just using that. That's why he won't give that information, because it all is BS. If it was Cuban that was running, people say, show us your goods. He'd say, no problem, folks. Let me open up the books. Here it is. I told you I was the real deal. That's what I'm saying is, we have the goods to back it up right now. Now, there was that article about a few days ago where the guy was saying the market can still go another 8 to 10%. Yeah, if we go another 3%, now we're starting to get frothy. If frothy, we get to 5%. Whoa, then we're getting a little overdone. But we're really not, because nobody believed this for the last 200 handles. Nobody believed it. It's not like 2007 when everybody was jumping in hand over fist. Everybody was all levered up like crazy, just like people talk about the consumer debt. People have been writing down their debt for quite a few years after what had happened. And people go, well, it's still kind of, yeah, but another person made a good point, but their financial assets are much higher than what that debt is. I mean, their houses are valued not because we're on a crazy economy like the UK was, and now let's see what happens when you pull the plug. The property holdings looking out have been halved based on the Reuters poll that was just released this morning. They're looking to cut back on everything. That's what I'm saying. We've got the real deal here in the States, even though people don't believe it. We do. That's what I'm saying. We've come back, so we have the good fundamental base. So that if we get a storm, we got a good fundamental base that the house is sitting on a good foundation. We're not going to get knocked over like a teepee hut, like these places you see around the globe, everywhere else it isn't the U.S. of A. I'm just telling you, they can't withstand a storm. We can't. That's why you saw all these problems happening now in Europe, because they with the banks, because they wouldn't rip the Band-Aid. Now, the banks here, they were forced to rip the Band-Aid by the government, but like I said, they weren't. And I kept saying, that's going to be a problem. That's going to be a problem. Now we're starting to see the rooster come to roost now, and we've seen all these problems with Deutsche Bank, Bank of Montepaschi in Italy. But that's what I'm saying is we'll see what happens, but that's my extended 2 cents.
Well, I'm I'm really I get positioning is, in my opinion, it's more important than anything. Positioning.
Hmm.
It's just when everybody is long or everybody's short. When you're over, and I get what you're saying. Like your brother sold. Okay.
Yeah.
Now your brother's not everybody, but actually understand that story, and I think we saw. And this is the whole. Let me. I'll take over, and I want to show you. This
Okay.
is. I had a very in depth conversation with some of the what I consider the best traders that I know. Okay,
Hmm.
and I'm actually not even talking about. I'm not even talking about our Wise Trade group that we have, our chat room that we have. I'm talking about some of the guys that I know that are really like they manage a lot of money and they trade for themselves, and they're very 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 probably the most efficient traders I've ever met in my lifetime. And this group, and I was talking to him, and this is pre-Brexit, right?
Hmm.
Um, and we all came to the same consensus, and this is pre-Brexit, so this is us here. And I said, because I didn't think Brexit was going to happen. I know we had this conversation. This was before the Brexit, before I went to Hawaii, and
Hmm.
I said, and this is okay. This is our E-mini futures chart. Okay, so this is where we're at.
Hmm.
And I had this conversation with you guys, the wise traders here, but I'm going to reiterate that conversation I had with these. Like I said, probably some of the best traders I know. I said, okay, listen, we're not going to have a Brexit, even though we did, but this is before then. I said, we're not going to have a Brexit. What's going to happen is the market's going to push to new highs. We're going to push up towards 2,200. Why? Because we've had the most amount of redemptions by individual investors in history, like this last year. So if you look at the equity markets and you go, okay, well, over the last year, I said, what's been the story of the market? The story of the market has been the Fed is raising rates. So if the Fed is raising rates, and this is the story that I've been trading on too. I mean, this is not anything that's like groundbreaking. It's the Fed's raising rates as the Fed pulls and reduces liquidity out of the market, and they raise rates. Stocks are going to eventually go lower because the reason why they have moved higher over the last uh, you know 6-7 years right here is because the Fed is actually doing quantitative easing, putting a massive amount of liquidity into the market. So investors, the mom and pops, and your brother is a good example. They've been selling into this rally the last year, and we've seen nothing but major redemptions from the individual investors, right, over the last year. So what happened is we pushed into new highs. I said, when I was talking with this group, and like I said, we all came to the same conclusion. It's like, okay, when we don't have a Brexit, even though we had a Brexit, when we don't have a Brexit, we're going to push to new highs, probably somewhere up towards 2,200. Because what that's going to do is that's going to get everyone long that just got out. So you got, because it's the greed factor. Everybody gets out, everybody's taking profits. My uncle's a good example too. He is a man who keeps is just so he's got millions of dollars in the markets because he's an executive for a Fortune 500, as S&P 500 publicly traded company, and he's got a lot of stock, and he's been selling into this rally too. He's a pretty savvy investor. He's ever since I known him, he's always been in the markets. And he's like, yeah, I'm selling up here too, and this is over the last year. He's like, I'm going back into cash. So now what happens is you go to new highs, and then it gets all the people that have been selling for the last year. You go into new highs, they're getting long again because everybody's going to think, oh wow, here comes the next leg of the stock market. I don't want to miss it. Then you have, people who've been short, they're just forced to cover, so they cover. And once you get everybody long at 2200 or around 2200, then that's when the market kind of, plays hot potato, or the music stops, and then we start following from there. It's the perfect, in my opinion, where we're at right now is the perfect bait and switch for this market, where the market really sticks the individual investor with all-time highs. And so does that mean we're going to reverse today? I don't know if we're going to reverse today. I think that we are at levels that are consistent with my idea of what I talked about before. Although what's even crazier is we did have a Brexit. We did break into new highs, and we might even go a little bit higher, but we're getting close to that, like 2200, where we're extending ourselves towards a, towards 127% extension. Once we get up here, that's where I think is going to be the ultimate failure of the market. Now, does that mean we reverse where we're at right now? I don't know. This market still looks pretty bullish, but it's. I think it's consistent with getting people back in. It's repositioning the greed factor, and so that's why I think the market becomes very vulnerable up at these prices, in my opinion.
Well, like I said, people kept poo-pooing that. I kept saying, look, the overall fundamentals are what's going to push this market, and it's been true so far. And until I start to see some termites eating at a couple of the legs on the stool, I'm not worried about the stool. I'm not saying that we're going to turn around and take off, but I'm saying is until you start to see some things like, whoa, this housing number was horrible, and oh, by the way, this number, and people go, well, don't worry about it, we've seen the liquidity. That's when you start. When I start to smell smoke, I start to smell some smoke while I'm sitting there watching a movie in the theater, then I'm going to go and start to worry. I'm not going to worry about if someone's going to be walking around with a sign telling me, it's going to come, it's going to come. I don't care. I'm going to watch the freaking movie. Because everybody else is going to sit there and be watching that from the beginning of the movie to the end of the movie, reading that guy's sign. It's going to come. Fire's going to come. Fire's going to come. Look, I'm going to enjoy the movie. When I start to smell some smoke, I smell a little whiff of smoke, I'm going, you know what? Now it's time for me probably to get up, take notice, and start to exit out. I'm not going to wait till I see the fire. But I'm not going to pay attention to anybody that's going to be running around with the same sign. Right now, we're 3/4 of the way of the movie, and the same guy that's been running around saying, and I'm talking about those people, it's going to come, it's going to come. They've all missed the movie. That's my point, because they paid attention to all these Chicken Littles, and they've missed the whole move up. They've missed the whole entire movie. So now they've been like, what happened? What happened? What happened? Movie's already almost over. I mean, to me, I think we're probably like in the 7th inning right now. We can probably see some pullbacks, but we're okay. But everybody that's been telling me that I was going to be wrong, they've been wrong. I mean, scoreboard, we're at all-time highs. Everybody kept telling me we were going to, and they're going to, but you know what? This is going to happen. This is going to happen. You know what? When I smell the smoke, and I'm pretty good about smelling the smoke, then I'll be worried. Best productivity in 35 years. All-time 43-year lows in jobless claims. That's the stuff that makes a difference. Best year-to-year over year, 7-year year-to-over-year car sales since the 1930s. I'm saying is you're seeing it across the board. Now, when we start to see a deterioration of those numbers, then people say it doesn't matter because you by that time you've got QE from the BOE, you've got more QE from the BOJ, you've got more extended QE from the ECB, so it's pushing them. That's when you say, you know what, folks, I've enjoyed the party, I know everybody's having a good time, but I'm going to get out and sneak out the door right now. That's when you sneak out. Now when everything's still going your way, it doesn't make any sense. Doesn't mean we won't have a pullback. And if we pull back 40 handles in the S&Ps, I'm sure there'll be a lot of people saying, I told you so. Yeah, how about the guy who told me after Brexit that we were going to go all the way down to 1,800? Where's that guy? I haven't seen that guy around. He was on the webinar. He told me, oh, we're going to 1,800. I go, no, we're not. Okay, I haven't heard from that guy. My guess is he's probably panhandling at this point. But like I said, that's the way I look at it.
Anyway, hey, I just realized what time it is. I've got to take over here. But so just real quick.
You know what? Well, I want to say one thing real
Uh,
quick, because I just saw you mark that off in Twitter. If anybody knows the story, and I'm not going to say the story. Let me tell you. Now I'm going to finish it right here, right there. Okay, you just marked on Twitter that person and his wife that you're talking about. That person, he was the biggest bear of all bears I ever saw. That effer is now broke as a mother. Okay, and guess what? Up until just a few months ago, he was zero hedges, big time boy. They even gave him his own spot. He can write all the bearish articles he wants. Booyah, mother effer, scoreboard. And you know what? I used to think, because I followed that person, actually not him, but the wife, and that guy kept putting out bearish spooge tweets. And I go, how's this guy making money? Because he kept getting proven wrong, and it kept going against him. And so I was like, how's this guy making any money? But I'm just saying, fear sells. So, but he kept having those bearish posts, and Zero Hedge was just giving a big hard on him. So they gave him his own post, and now the guy's broke as broke can be. People like say he's a broke
oh yeah.
joke. He's a
Oh
broke
yeah.
joke. But that guy was the same people I'm telling you, that's the guy. That's one of those guys that kept saying, the sky's falling, the sky's falling. And I say, how's this guy making money? I'll give one last story. This is about, my memory is excellent. When I told you about the dollar yen a few years ago, but when it took off, I was telling you, probably like, how does this guy know exactly what the trade is? Of course, I remember my losers perfectly when they're big losers. But I remember that lady saying, oh, he's so good. My boyfriend, he's going to share this great trade. He gave me permission. And it was to buy the bonds. And I was like, and back at that time I was trading the notes, I was like, it looks like it's going lower to me on a technical trade. I'll be doggone. As soon as the guy shares the trade, boom, bonds and notes go south of the border. What a loser. Just goes to show you, if you fall in love with your dogma like this guy does, this guy's now a broke joke.
Okay, so hey, I'm gonna. Okay, so here's Joseph. He says, no disrespect here, but to Blake, but it seems to me you've been saying that the market is pretty vulnerable ever since I started listening to you 2 years ago. Okay, so just so you know, 2 years ago we were at 2,000, and here we are at 2,100. So Joseph says, and now you were saying that the 2200 extension, that the markets are going to be near the top. Would you classify yourself as a stock market bear? Just trying to figure out if this is a misperception or not. To me, it seems you've been warning against buying into the market for years. Is that correct, or is that just bad read on my part? No, it's true. And if you go back 2 years ago, let's just say 2 years ago, we were at 2,000, and here we are at 2,100. We've been as low as 1,800. And we've been as high as 2,100. And when we were down at 1,900 down here, I'm like, hey, look, we got a double bottom. So, Joseph, I'm talking to you as a trader, not as an investor. I sure as hell would not be buying up here. Are you kidding me? You think I'd
you've had some very good calls in the S&P. You've had some very good calls in the S&P.
Crazy. I absolutely. You go here and say, oh yeah, this is a good buy up here at 2,000. Yeah, now you're sitting in a 10% decline, or you've had a 10% haircut. Hey, if you want to go ahead and buy up here, go ahead. Be an investor up here. Go ahead. Be my guest. Have fun with it. I ain't buying up here. You buy up here. Go ahead, and you get the S&P that's gone up from six now, and I'll tell you, I bought at here and I sold here. I bought at 750 and I sold at 1250, and I tried fading the market right around somewhere around here personally. Like somewhere, I want to say right above the highs at 1,700, and I got ran over like a freight train, and I said, "Bip, that's it, I'm done. Nope, not doing it." And yeah, if you want to chase the market up here, go ahead, feel free to. I encourage you to. I encourage you to just get long right now. Just get long, and then see what happens.
No, you're right on that, because I will tell people is that We've seen the reason the S&P we haven't seen a better pullback is because of the anomalies, because of the BOJ, the ECB, and now probably the BOE, and we've seen those interest rates. Like Blake says, they are flooding the equities markets, which is true. My take is the people that say we're going to 1800, 1600, those people have been wrong. But what Blake's saying is correct. The reason the S&P has not only benefited from the U.S. economy overall, the good fundamentals, but Blake is 100% right. We've benefited from all the liquidity from around the world that continues to push us up higher. That's why we just don't see the corrections don't last very long, and it has been an anomaly. And I called the S&P to go lower. What was it, 2092, and it fell with the 60-some handles with the head and shoulders, diagonal, blah, blah. And then I was doing really well, and just like Blake, I tried to sell it on the way back up, and I was bullish. And I got ran over, and I'm like, the hell with this. I go, this S&P, it trades like a crazy man, and the only way I can successfully trade the S&P is if that's all I trade. S&Ps, NAS, and Dow.
You can't be an investor here. You have to be a trader in the markets. You can't. This is not a buy and hold area. You know, after we've gone up 300% from the lows, if you're buying and holding now, I mean, I'm in 100% agreement with everybody that I've read that if you buy now, you're not gonna make money for 7 years, maybe 10. I think we're going to be in a major consolidation phase for the next 10 years. Does that mean we're going to 1,200 in the S&P? No, we're probably going to be bouncing around here for many years to come, and it's going to be frustrating. But if you want to buy when it's high and then get out of your longs when it's low, like a lot of people do because they get emotional about buying this stuff, go ahead, be my guest. But you got to buy dips. You can't buy into strength. Oh, it's a new breakout. Well, maybe it is. Maybe the S&P goes to 3,000. But you have fun buying it up here. You guys do it all day long. It's your money. I ain't gonna do. But I tell you what I'm gonna do is when I see a failure up here, if we get one, that's going to present all sorts of opportunities. And there is way more risk buying when it's higher than when it's lower. You have to see blood in the streets. Let the market show you blood in the streets. Then get long. But anyway, all right.
This is the longest we've ever talked.
It is the
longest. You've been getting the break.
I know. I'm going to put everybody on a break. It's Friday, and I'm tired.
I was even going to jump off the webinar as soon as you came on, and look, here we were with the longest we've ever spoken. But it was a good conversation. But what
it was. I know. All right, Paul. Hey, I'm gonna put everybody on hold for a few minutes because I got to get through the analysis when we get back. You know what I did? I did something stupid. I did something so stupid just a little while ago.
Huh.
I sold my Euro Canadian, and I bought it at 144. I meant to sell my Euro, half my Euro pound, because I'm long the Euro pound. I sold, and I meant to sell half. I did sell half of this though. I own it at like my cost average now is like at 84 pence or whatever.
Mm-hmm.
My cost average 84.03, but my cost average before was over here. I just sold half of it though, up here. But I meant to sell. I meant to sell this. I ended up selling my Euro Canadian because I still have Canadian. I still have this exposure. I bought it at 144.70. And I just sold it on accident. I thought I sold my Euro pound. I just had to rebuy it up here. What a jackass. That was a mistake. But anyway, it's so frustrating when I do stuff like that. All right, I'll be back. Paul, thanks for being here today. If we hopefully we'll see you a little bit later in the chat rooms.
Sounds good. Talk to you later.
All right, man. Talk to you later. And traders, I'll be back in about 5 minutes. I need to get some more coffee because I can't even believe I'm still awake right now. Be right back.